What if I told you there's a trading strategy so powerful, it's like having x-ray vision in the markets? Today I'm going to show you how the big players in the market leave breadcrumbs of liquidity and how we can follow them to profit and make professional profits. Today we're going to dive deep into what I would consider my most powerful strategy in my arsenal, and that is liquidity trading. First, we need to break down what liquidity actually is. And liquidity, think of it as banks in the market. When you go down the street, when you drive around, you see banks all over the place. You know exactly where they want to take the money out. You know exactly where to go. It is the same exact scenario in the markets. When we are trading, the banks leave footprints. They leave marks that we follow. They leave areas of interest. These are not random spots. These are precisely where smart money players enter and execute their trades. And I'm going to show you where those levels are today. And since I know you all will be amazing traders, because one, you're putting in that time, you're putting in that work, and two, I already know it. You always want to ask why when getting to the next level, because you want to understand why everything is happening. And the reason these footprints are left with smart money is because they can't just execute the trades. They play with such big numbers that they have to actively put price in a certain position. They have to maneuver. They have to utilize certain things. They have to use round numbers. They got to remember where they're entering. They got to exploit certain positions and exploit lower tier traders like ourselves. And that's why we don't want to play against them, because they got the big money. We want to play with them so we can join the ride, make some money on the way. So let's get into the charts. So when we are talking about liquidity, guys, as you can see on my chart, I'm going to show you 3 levels of liquidity. I'm going to show you 3 things that you can add today. One is to actually target, or another one is to use for entries, and then another one is to actually catch monster moves. So the first level right here is when we're looking at targets, right? So when we're looking at liquidity, it's so many different forms of liquidity, different ideas. But in this case, when we have something that consider a relatively equal top or double top, double bottom, things people trade as far charts, or sometimes a trend line, like so, where you have like kind of a trend liney kind of move to the upside, those can be considered liquidity as well. But this first level, when you have relatively equal lows or equal highs, most of the time people entered here, price pushed down, they think price is going to fly way down here, and then it goes a little lower, and then buyers step in the market, something to the left like a demand or a nice level of a clear low that was swept, and then we take out those levels. So say you enter down here, you can say, hey, this is a clear target for me to target in the future, because it's double tops, price may want to gravitate there, and you just got to back test. You got to look into it, right? You got to gather data, see how much and how often it actually works. Next thing you want to see here, this is our Asia session. So when you look on the charts for the examples I show you, you're going to see that Asia session typically it's a gray box. Well, Asia lows and Asia highs. During that time is low volume, not a lot of players in the market, not a lot of big players. You got our big banks in New York, London, all those, they're pretty calm, they sleep, they close. During New York, London session, all these things like that, the banks actually utilize Asia session, and this is where we come into play. We have these Asia lows and Asia highs. Now let's just say we were actually selling and we had a nice supply zone right here. Well, price would play around in Asia within the box. Soon as London open, we kind of break out of there. Let's say this was a big push during London, and then during New York, we could look to enter somewhere here to target these lows, because more than likely banks and big players love to use those lows, especially if it's with a round number, especially if it's near a midnight price, things like that. The banks love these levels, and they are easy levels to target and use for entries. Now, our last scenario is more of a model, and it's a liquidity based model, right? So we don't want to just get in on levels that look nice. We want to get on levels that show signs of strength, that show determination, that liquidate, and then we want to see intention. So in this case, we have price moving kind of nasty and annoying, showing bearish, then we went bullish. Then we get this big push to the downside. So you can say, hey, we're bearish. But right after that big push, we had a nice big push to the upside, showing some displacement. If you don't know what displacement is simply a large candle or a large fair value gap where price takes out one way. It could be up or down, whatever. And then we come back to our levels right here, something like so. And then we enter the market to the upside. So this is 3 levels of liquidity that you can use. Very simple. So let's get into some real examples so I can get you guys out of here and start making some real money. As we look at NAS 100, we have a nice big push to the downside. We actually tapped into a daily level of demand, and one thing we did was, again, remember what I said, sometimes you can get a big push to the upside and then just a nasty one to the downside. Don't make this up, it just happened to be there. But what we see here is we had a nice low here that created a high in the market, but then that high just wicked and killed that low, so that shows a strong high. But immediately we get displacement, and as you look at these candlesticks here, this is our displacement. If we zoom in here and look at this level, you see that price gapped up a little bit. Price actually showed a ton of imbalance in the market. So we want to look at that level, and we want to be interested in that level. Now down here we have an imbalance. We also have a gap here. So two things you could do here. You could either take the imbalance. I usually take a couple candlesticks to the left. So it's simply two things you could have done here. You could have took an entry once we hit the box, or you could have waited for a high to get taken like so. Nas is flying out, but this is a key area where you could have took an entry somewhere around here. Let's just say protect our lows, because this should be a strong low. The reason we like that level, that sweep a low and then take a high immediately, or sweep a high and then take a low immediately for the sell side, is because that level should be protected. Now as we look for liquidity to target, we have Asia session highs here that we could have been targeting. We have some up here that we could be targeting. We also have trendline liquidity right here that already got taken, which could have been an easy target right here. You could have just targeted the top of this line. It would have been a beautiful trade. And then you also have just weak highs up here, something I didn't teach today, but these are very simple examples of how you can use liquidity. You can even go see these things on the lower time frame. It all happens everywhere. And then also up here, these may not seem like equal highs, but this is a relatively equal high of area here. So maybe in the near future, maybe not. We don't know. I don't predict the market. I just trade it. We could go up here and target something like that. So this is something to keep in mind. Let's go over one more example and get you guys out of here. So this example is a little different, and it's a little bit more choppy, and I want to show you how these things work regardless of what's happening. So as you can see here, we have price actually pushing to the downside. I go through these really quick because it's simple, guys. You just got to look for it yourself, see what I'm showing, and go from there. But we got chop, 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 and then we get this sharp move, right? We create a low in the market, which create a new high, and then what happens? That high, that low that created that high gets manipulated really quick. I deem it a sweep of liquidity for three reasons actually. One, because we are bearish. Two, because we took a high, wicked it out, and then we had an aggressive push, and we see again our displacement right here, that nice imbalance that we would love to see, and then we actually make a big move to the downside. So what I would do is map out a nice supply level, or I don't always do this, I'm doing it for you guys. Usually I'll just draw out where I want to trade from and go from there. But we have a nice level here. All we got to do is wait for price to get there during New York session or something like that. As you can see, we get wicks, and chop, chop, chop. Regardless of anything, take the trade. Imagine you take this trade, you got to sit through it, because you just need to follow your plan. It was more entries here because, again, I'll show you really quick before we go for targets. Another entry, we have a nice sweep here, and then what happens? We end up breaking the low. Now, I wouldn't consider that a true sweep because it should have been a sweep and an aggressive push, but it did take a high and then immediately took a low. So you could have potentially two entries in this exact area. If you were very confident, it's something I would do for sure, because I trade my plan when I see it, regardless of how I'm feeling. That's what I got to do. And then we want to talk about liquidity, right? We want to talk about equal levels. Well, price left relative equal lows right here. So this would have been a nice entry or target, where we have these levels in here. There's a bunch of orders down here, stuff like that. Bring that back. And then if we look to our left, we have what? Trend line liquidity here. And then as we continue to move up, we have weak lows. And then also, if you look at this entire area, what does this remind you of? It should remind you of people who trade support resistance. So this is a clean level that we could just target and just get straight to. Easy peasy lemon squeezy, you feel me? And make our profits. Yeah, back in hindsight, it sounds easy, but this is what I do on a daily basis. I just wait to see it. Once I see it, I execute. That's all I got for you with that. So a couple common mistakes to avoid is never chase every single liquidity sweep. All you need to do is go collect data, gather information, see what a liquidity sweep is and what isn't. Follow your confirmation signals, follow your plan. I can't really tell you how to trade, what the best strategy is. Only I know what works for me. You got to figure out what works for you and follow that to a T. Most importantly, as I always say in every single video, make sure you manage risk. That's going to be the most important factor in this strategy regardless, because no matter what, nothing works 100% of the time. And though the strategy is amazing and I love it, I call it my 6-7 figure strategy, you must manage your risk. So the last thing you just need to do is identify your major liquidity zones. Wait for price to get there, deem it a point of interest, and then once price gets there, decide on whether you are executing on that plan or not, and go from there. Do me a solid, drop a comment below with your biggest strategy takeaway from this video. Let me know how it helped you or how I can help you more. And if you master this one trading strategy, you will be light years ahead of most traders. Until next time, it's your boy Divine. I appreciate you becoming a professional trader with professional profits.